Blockrise just launched Bitcoin-friendly bank accounts with bunq. That sounds like a product update, but it really is bigger than that. It is a sign that Bitcoin is moving into the banking rules of Europe. This is the Bitcoin Weekly by Blockrise, recorded at MadBitcoin in Madrid. Here's what's actually happening. Start with where we are. Bitcoin is trading at around 69,000 euros, or roughly $82,000. Over the last 7 days, the price is up about 1%. However, over the last 30 days, it is up over 11%. On 29 April, bunq announced its partnership with Blockrise. Blockrise is the first business to use bunq's new banking-as-a-service infrastructure. Starting in the Netherlands and now rolling out across EU, Blockrise users can access embedded bank accounts directly alongside the Bitcoin services. And that matters for more than one reason. For years, people who wanted Bitcoin in Europe had to stitch two worlds together. A normal bank account on the one end and a Bitcoin solution on the other. But more friction, not needed transfers, and frustrating questions from your bank. And this launch changes that. With bunq's infrastructure underneath, Blockrise users can access bank accounts with the same platform experience. Fiat deposits are protected up to 100,000 euros through the Dutch Deposit Guarantee Scheme under bunq's banking license. And that is not a small detail. That is what makes it feel familiar to a client who wants Bitcoin exposure but still expects normal banking standards. And that is why I think this story matters beyond one partnership. The next phase of Bitcoin adoption in Europe will not be driven by louder marketing. I think it will be driven by better rails, meaning better integration between euros and Bitcoin. And this is the infrastructure story most of the market ignores because it's not dramatic enough. But these stories are the ones that compound, no hype with actual product launches. Then, the market panicked for a moment when Strategy said it could sell Bitcoin to fund dividend obligations, and that headline traveled very fast. However, the conclusion is rather boring. The real story is not that Strategy is bearish on Bitcoin. The real story is that Strategy is now operating like a full capital markets machine. Michael Saylor's answer this week was rather blunt. If the company sells some of the Bitcoin, he says it expects to buy far more than it sells. Strategy also resumed buying yesterday, adding another 535 Bitcoin to the balance sheet, worth about $43 million. So the message is not never sell in the pure sense. The message is now use the balance sheet, use preferred equity like STRC, manage the capital stack, and that is a more mature phase of institutional Bitcoin. Less dreaming, more financial engineering. Two things for the next 2 weeks to watch. First, whether Bitcoin can reclaim its 200-day moving average with conviction, and it's getting close now. That level matters because it separates a recovery rally from a broader structural turn. And second, whether infrastructure stories keep accelerating. More banking integrations, more regulated wrappers, more ways for traditional capital to reach Bitcoin without feeling like it's stepping outside of the system. And that is where the real adoption curve is showing. This is not financial advice, it's my perspective on what's happening based on 10 years of building in this space. Do your own research. See you in 2 weeks and verify your Bitcoin.